Whether you trade or invest in cryptocurrency or not, you probably heard of the sudden collapse of FTX, one of the largest cryptocurrency exchange.
FTX went from a $32 billion company to bankruptcy.
FTX, the big exchange, has filed for Chapter 11 bankruptcy.
Has more than 100,000 creditors, according to these documents. It was a stunning reversal.
On the stunning FTX collapse, so the latest being Larry Summers, the former Treasury Secretary, calling it a possible Enron.
And 134 affiliated companies all over the world. You've got places like Nigeria and Uganda, South Africa, to Europe, Hong Kong, and Switzerland. The estimated liabilities stand at between $10 billion to $50 billion.
So who gets paid, when, and how? We've already seen large investors write down their stakes. So
It's quite sure how long this volatility will last or how many other businesses will be hurt from FTX's downfall. Many experts and analysts are bracing for new lows.
FTX was valued at $32 billion. In just a matter of 2 days, it went down to probably nothing. And its crypto token, FTT, was at one point trading at $80 per token. As we speak right now, it's about $2. As for his 30-year-old co-founder and CEO, Sam Bankman-Fried, well, his personal net worth was over $20 billion, one of the richest crypto billionaires. He was on the cover of the Fortune magazine just 2 months ago. By yesterday, he resigned as the CEO and filing for bankruptcy, Chapter 11. And FTX is not even a publicly traded company. It's privately held. So does it really affect us? Do we even care? Well, maybe there's something that we do need to understand here, and I'll tell you why. If you're not familiar with FTX and Sam Bankman-Fried, there are a lot of detailed information on the internet. But here in a nutshell, FTX is a cryptocurrency and derivative exchange. Its co-founder and CEO Sam Bankman-Fried, or SBF as referred to often by the media, is an MIT graduate with a degree in physics back in 2014. He initially worked as an ETF trader in an investment firm. Then he started his own trading company called Alameda Research. After attending a cryptocurrency conference in Macau in 2018, he moved to Hong Kong and launched FTX with fellow MIT graduate and a former Google software engineer, Gary Wang. And FTX is short for Future Exchange. They raised several $100 million from large venture capital firms like SoftBank, Sequoia, and others. And even large investment firm like BlackRock, Ontario Teachers Pension, they went in with over $100 million of investment in subsequent fundraising round. They attracted many customers by offering 8% of interest on fiat and cryptocurrency deposit on their platform, while the interest rate was almost at zero. They also promoted their brand heavily by using top celebrities and running commercial advertisement on TV and other media constantly. So along with their rivals such as Binance, OKX, they became the largest crypto exchange in the world, handling over 100 million of trades per day. The last 2 years was the bull markets of cryptocurrency, and FTX was doing very well and growing rapidly. As for Sam Bankman-Fried, well, he's the poster boy of the crypto industry. He was not a flashy guy. Ordinary guys always drive around in his Toyota, wearing t-shirt, shorts, and his New Balance runners. He even pledged away his fortune to charity, just like Bill Gates and Warren Buffett. So what happened? Well, a few days ago, the problem seems to be triggered by liquidity crunch, likely over leverage, as FTX does have several $billion of debt on their balance sheet. Then it was revealed that it was triggered by the sudden sell-off of FTT tokens. as a result of reports by CoinDesk citing that Alameda Research has a significant portion of its $14 billion asset under management in FTT. Wow, seems like an act of popping up the price of FTT. Now there are various reports on possible misappropriating customers' funds, means that the possibility of FTX has been lending customers deposit to Alameda Research for their risky trading and suffering massive loss. So who will be affected? If you trade cryptocurrency on FTX platform, you're definitely affected. Just a quick check at the FTX website. Currently, all the withdrawal and deposit are suspended. As crypto exchange is not as well regulated as the regular exchange and banks, chances are customer may lose all their deposit, whether it's in fiat or cryptocurrency. As of yesterday, this bankruptcy filing only affects FTX International. But today, the latest report showing that they're also filing bankruptcy on FTX US as well as Alameda Research. On the other hand, if you also have investment fund with BlackRock and Ontario Teachers Pension, you may want to check with them to see if your investment is affected as well. Even Sequoia is pretty much write down their investment to zero. Although FTX is not a publicly traded company, this will certainly not only rattle the cryptocurrency, but also the mainstream financial industry in many ways. So why should we value investor care about this? Well, there are several lessons to be learned here, even though the whole thing is still developing. Reflecting from our value investing program. 1. FTX claimed to be profitable, but they do have very high or significant debts on their balance sheet. And it may potentially has liability in excess of $50 billion. It is not unusual for venture capital firms such as Sequoia or SoftBank to take a higher risk in the hunt for the next unicorn. But it's a bit surprising that even large asset manager or fund manager like BlackRock and Ontario Teachers Pension, they even jump in with over $100 million of investment. For those who follow my value investing program, even we as individual investor, we have very strict guidelines on scrutinizing a company's debt to earning or debt to free cash flow ratio, just to ensure that the company has very solid financials before we would consider to invest. 2. There's no shortcuts to real success. As Warren Buffett once said, when the tide goes out, you will see who is swimming naked. Well, during the COVID pandemic, the world was flooded with free money from the governments. At almost 0% interest rates, capital chases growth at all costs, and everyone wants to get rich quickly. Even professional fund manager and investors, they fell victim of the fear of missing out. The bull market presented many seems to be very successful company or genius CEO. However, this overnight success is not likely to be sustainable, and often is too good to be true. As value investor, we want to invest only in solid businesses with proven track records over good and bad economic cycles. And 3, keep it simple. Invest only in business that you can understand. Being a private company, FTX offers very little transparency on its business and its financials. It doesn't even have a board of directors to oversee the business on investors' behalf and to hold the executives accountable. Their investors are some of the most experienced and successful venture capital and investment fund, with a lot of resources and armies of analysts. I'm not sure if due diligence was performed properly, or if they even conduct regular review on their financial and thoroughly understand their business. While the bottom line, again, is invest only in business that we can understand. As the whole thing's still unraveling, we will keep an eye on how it develops in the coming days and weeks. It will likely to cause some damage to the credibility of the cryptocurrency industry, and it will also likely to accelerate the much needed regulation by the government. Hopefully, it will not lead to any systemic problem in the mainstream financial markets. If you enjoyed this video, please subscribe and stay tuned, and I will share more insights on how to invest wisely and safely. Until next time, take care.